Welcome to TradeTheMBI.com. This is John. This report is for January the 8th. And, we started off the new year with our nice little bounce, and then we got our short signal on the INX, but we were not getting a corresponding corroboration from our futures. So we've been taking it kind of calm, but what we wanted to do was to start to say, okay, just in case the market retraces a little, we're going to go ahead and sell call into our open long position. Go from there. Now, we're reaching the point where we may get a ratio size signal. And for those of you who don't know what that means when I say something like that, it's when the yellow here moves above this white line. How is that significant? Well, it can portend for us some big downside moves, and it will depend on which line is greater, the orange or the yellow. And so that's what we'll be looking at that point. And what that's going to represent is a distribution versus an accumulation setup, and it's because well, you can't really call it an oscillator here because we're not bound by any numeric dimension like you would for stochastics and that might get overbought. We don't have those problems of seeing through into like a micro level of where that might be. And we also then look at our up and down power here, and what we've been waiting for is this ratio to shrink. And it started to do that here. Those last two numbers, we compared them together, and you can see how much closer they were. The bulls had been much more in charge before this setup, so that's kind of changing. Getting near overbought here. Now, what I was looking for was we wanted to see this shakeout rise to a level that would at least be equal to where it was right here, even though we're at a higher price. That would at least make a convergence out of this move. It's doing that. So this is kind of a mixed market. People want to be all for it, and there are plenty of, warning signs to, prepare for a couple of little retraces. At least in this particular case, we were looking for this low to be taken out at 1455. And boy, we got within a point of it there, so maybe we have a little bit more to test on that. And then the full short setup here from this red dot setup is all the way down to 1437, which would be a little bit more, not horrible, but definitely interesting, and definitely going to be important to see where we end up for Tuesday, because it's right about when I figured we would get to this setup. And if we do get that mark, now an improvement in price should give us a down pivot if there's a significant number of buyers moving into that, which would take us away from this setup. But as it is now, you're going straight from the bottom to straight to the top, and I always look for those kind of dramatic moves as clear signals. Support resistance wise, you hit that 1465 range, and it's kind of backed off from there, and that 1456 has been sort of a pivot back up from there. So it's worth noting. And gray dot that came in, expected the low to be retested here, and sure enough, did exactly what it was supposed to do. And now we've been talking about this one, the setup of our up-down power. We were looking for this high relationship, and when we get this kind of setup, usually after a few days, I always say, hey, the bulls, usually are getting tired, but if bears don't take control of it and get a high ratio over 60, and the way we do that is we just simply take, let's do it together right now. We'll take 186. Which is the lower number, the red, which counts for our bears, and then divide it by the 320. And I guess it's about 0.58, which is about 58%. So again, bears really have not been able to overcome the amount of buyers in the setup. So you had fewer of them, and that's not to be surprised. This is where, if you get enough of them, price will sink very quickly. If you don't, you kind of languish for a day or two, and then bears start to realize, oh no, I better start covering, and that's when you break out to new highs. So we'll be watching this setup coming over. Now this is a problem, 82 on the price oscillator. So there's just enough warning signs that you say, okay, it's just not worth opening a new long setup unless I get enough of a retrace to make it attractive. The computer's still projecting 1470 upside, 1430 downside. So keep that in mind. Now, we wanted to have a stop if you didn't turn around and sell a call, which was the suggestion for starting out the week. We wanted to have a stop right around that 62.75. You can see it came very close to that setup. Didn't quite hit it, and you can see the differential here now. You had the orange line well above. That was very bullish, and then it started to change with the yellow going below, and then right here it was like right at the precipice. If I slide this up, you can see what the reading was there. The orange just fractionally above So that's still left the overall bullish side still intact, but just barely, so that can shift at any time. So something worth noting. Gold gives a buy signal. Now we were looking for this where we would dip down to this yellow, not the yellow, the cyan midpoint of the extreme histogram at a point where we were testing the lows. So higher extreme, same lows, then we get a bifractal in the form of a halibut. 161 is that upside target for right now. And you'll also notice the shakeout's higher. So one little improvement in the shakeout. And gold's on a nice trek to really bounce. We need more of a retest in USO, but actually I don't think we're going to even wait for that. If we get a little bit more from USO an upside, we'll buy a put, and then we'll turn this into a hedge setup. And for those not familiar with what that means, we'll buy a put that's a couple months down the road, maybe into March or even April, and then look to trade the stock at lower points by selling puts to even it out. And for those that can't sell puts, we'll go ahead and buy the stock and create a little arbitrage in between. Very safe way to play it. And we'll just eat away at the premium that we had to pay for the put. By buying in the money, we'll be able to do that. CLF, a nice little retrace, a little bounce from it there. We've retraced these positive extremes. Still, we were looking for a little bit more out of it, potentially if there's a little more market move down. But that's bullish right there with that orange above. So positive from that standpoint. X, likewise, it's just doing fine. Nothing too particular with these. We wanted to sell calls into WLT in this rise, and took a nice explosion there. Still bullish from that setup. So all in all, fine start to the year. Nothing over dramatic. We're not getting crazed or anything right yet. We want to let pension guys go all in, do that kind of thing, and then see what kind of liquidity is left in the market from an overall standpoint. So I would expect that probably by Wednesday we'll start to have some significant number of trades into our new portfolio. So stay tuned, be ready, and we will attack it as it comes. So I'll just keep this one short and sweet. We're still looking for a little bit more of a retrace, but this was fairly positive overall. We're easing the overbought with this dip down here from a future standpoint, and I'm just looking for better alignment between my futures and the cash index. We got a little askew on this crazy liquidity drop here at the very end of the year, even though we were very bullish on the year end. It was just a bizarre, kind of crazy Ivan drop that it did. So it's fine. It's evening out, and you got to be patient with it. You don't want to rush it because that's how people get into trouble, and we're not going to do that. So if you do have questions or anything, please feel free to email me. But also join us for our live events. We've been doing several of those, and they do appear on YouTube after the fact. I also did a week in a review for dot alerts on the YouTube, and that's featured on the main page for Trade the MBI Now channel on YouTube. So check it out. As always, though, continue to trade well.